Alrighty, what is going on, YouTube? Welcome into another recap. I was gonna do just two recaps this week, but I hit a banger day today. But as you guys can see, I mean the balance is at pretty much $66,000. So we started this balance this week at what was it, like 49,200? That's what we started with, and now we're up at 66K. So I'm just gonna round it up, 66,000. So we're gonna go ahead and break down all the trades we took today and why I took them, the confluences, and some other trades that I didn't take, but other members in the community did take, and just show you that the flow state model it's literally everywhere, all day, every day. So let's go ahead and get into this video here in this recap, and hopefully you guys enjoy it. I'll try to make it a quick one. All right, so jumping into the day here. So once Asia opened, right? So let's go ahead and just kind of ignore that price action in New York. So we had the previous day high here, and we had a nice move at the daily opening. So going into the Asia session, we had a nice fair value gap here form. And I actually gave an outlook to my free Discord, my paid Discord, like literally everybody in my community. I gave them a outlook. I told them that I was expecting this to push up and to possibly come up to this weekly opening at 771. Unfortunately, we did not get up to that weekly opening today, but we did get up to the previous day high. So we did use this fair value gap to sponsor a move higher. That's exactly what I told him in the weekly outlook, that I was looking for this here, and I was looking for 2 to 3 a.m. to make the move up to there. Now moving over here to the 15-minute here. So this gray box is that 1 hour fair value gap. So if I were just to mark out this bullish 15-minute fair value gap here, I'll start showing you guys where I ended up signaling a long right here to the group overnight, because I did want overnight longs up into the previous day high just based off this 1 hour fair value gap. If I mark out the range, right, from the Asia session low from 8 p.m. all the way up to 11:15, you can see that this 15-minute fair value gap was in discount of this Asia range. So I like that, right? But before all of this happened, we come over here to midnight, right, at 12:30. So let's go to the 5-minute. Again, using time frame alignment, we look for the flow state model right here. So I like this nice closure above the opening price of this down close candle here at 12:30. I like the fact that midnight opened lower into the fair value gap here. And I like the fact that we ended up sweeping these relative equal lows here at 12:30. So this is a new 15-minute candle open at 12:30. We're below the midnight opening. So I ended up alerting a long right here on the CISD, but I failed to realize that 1 a.m. opened higher into, dun, 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 you guys guessed it, a 15-minute CISD with SMT up here. All right. So I ended up getting in with one contract here when I alerted this trade. And just to keep it transparent with you guys, I did not end up getting out because I had my stop right here, but I was pretty confident in this trade because once I started seeing 1 a.m. open higher and tap into that, and then we got displacement right after tapping into that 15-minute CISD, and we started disrespecting the bullish fair value gap after forming this bullish CISD right here. So once I seen that and we started moving lower, I ended up removing my stop loss and I ended up staying up overnight. And I told my chat in the trading chat, those of you watching that, if you guys are watching this, you guys can vouch for me. But I told them that 2 to 3 a.m. is going to be the mover. That's when price is going to move and get up to that previous day high, because it should not get back down below this low. If this is truly correct, and if price wants to move higher, this price action here should not get down below this low here. It shouldn't, right? Because we tap into the 1 hour fair value gap. We literally sweep liquidity and we get the flow state model right here with nice displacement, right? We have this little fair value gap here, but it came back lower. So I was like, okay, if it's not going to make the move right here, it's going to make the move literally at 2 or 3 in the morning. That's when the London kill zone starts. And I was completely right, because if we go to the 15-minute chart here, this is where I start analyzing the 15. Again, I pull my Fibonacci from the Asia range low to the Asia range high after midnight. I see that we have a discounted 15-minute little fair value gap right here. So I'm looking at 2 a.m. to open lower into that. Remember, what's the aligned lower time frame to the 4 hour, right? It's the 15-minute. Okay, so 2 a.m. opens lower. We turtle soup the 130 low while tapping into this 15-minute bullish fair value gap, while still respecting the 1 hour fair value gap. All right, so just for extra confirmation, I want to see us change delivery on the 5-minute because we're still in this 1 hour fair value gap, right? So you can see here 205 sweeps the previous 5-minute candle's low, which is 2 a.m. 2 a.m. opens lower. What you want to see if you're bullish. We end up getting a 5-minute CRT. We push up, we change delivery. We end up forming a bullish fair value gap here. And this is where I ended up adding 2 contracts. So my price was right here. I added 2 and it ended up being like my average price was like right around here, right where the CISD happened pretty much. And I ended up taking this trade all the way up to previous day high, right? For a total of about, let's see, for a total of about 54 points. I took it off at like 60 points at around 703. And I had my stop loss right below this candle's opening price. So right here. So this is about a 3.44 R. And I made about $3,600 on this trade. And you know the cool thing about running a community and everybody trading the same model and knowing the same confluences, the importance of time and how the candles open and the ranges and literally everything, right, that we teach, is that everybody in the chat took this fucking trade. Everybody that was up ended up taking this trade. Right? A lot of people didn't even get out here. And the reason why I didn't get out here is because first off, I was in with 1 contract. So that's literally like my usual size, but this was only a 35, 36 point drop. So I was only down about $600-$700. It wasn't anything crazy. Like I can withstand that, right? If a person can't withstand that and they're trying to follow my whatever signals or trade ideas, they can get out sooner because this little trade idea here, I mean, once we got in up here, right, on the CISD, I mean, this was about a 12, 14 point stop on average if you got filled up a bit higher. That's nothing, bro. That's like $200 on 1 mini contract. So if anybody took it with micros, literally pennies, right? It didn't move crazy. So that's why I ended up staying in this trade. And that's why I ended up waiting for a key time, which is 2 a.m., which is from 2 to 5. That's London kill zone, right? That's what I wanted to see. And again, I said it in chat from 2 to 3. If it doesn't move right now and it comes back lower from 2 to 3, that's when it's going to make the move. And I'll go ahead and put a screenshot up here just for, you know, transparency sakes and stuff like that. So that way you guys see that I'm not capping, that I actually said that. So after that, I ended up taking profit there, made the majority of my profits right there, and then called it a night. So going into the New York session, I'll show you guys where I alerted a short and why I alerted a short right here where I did. So if we go to the 15-minute chart, right? I'm looking at price action here. So if we go to the 1 hour really quick, just so I can show you what I'm seeing, we do have a daily fair value gap. So we do have a daily fair value gap. We get a 1 hour change in state delivery here. And I'm looking at this to potentially fall lower. And if I go to the 4 hour, you'll see why. So on the 4 hour, this 1800 candle, right, on the 4 hour, this is a 4 hour CRT. So this candle, I'm using this as a range, right? As a directional bias, right? Those of you guys that might want to clown on CRT or whatever, it works. It fucking works. I use it for something. I don't use it all the time. I literally don't. It's just for a directional bias when I'm trying to figure out like what's going on. Like for example here, yes, I'm bullish, right? I'm bullish up to here because this weekly candle has no top wick. So I'm bullish, but I'm seeing this here. I'm seeing a bunch of rejections at these highs, right? At the previous day high. So I'm looking, okay, this range here on the 4 hour, we keep using this, right? We're not closing above, right? We keep rejecting highs and we keep closing below these lows on the 1 hour. So I'm like, all right, I'm looking for shorts, right? I'm just going to be looking for shorts here down to that 4 hour CRT low, which is the 1800 low, which is that current low of day on the daily candle. But you can see here at market open, where's market open? Right around here. So this is where I ended up alerting a short right around like 940 during the 950 1010 macro. We had this rejection block right here. Okay. So if I go to the 1 minute, here, we have 930 open here. We push higher. We end up sweeping this liquidity. And at the same time with ES, we get an SMT divergence. So if I'm trading rejection blocks, I always require an SMT divergence because when you have SMT divergence, the asset that did not sweep liquidity or make that higher high, because on this here, if I just pull up the ES chart, you'll see that ES ended up making a higher high right here, right? So we made a higher high right here. So if we have an SMT divergence, this high here should be a protected high. We should not get back above this high. We should not sweep this, right? If the SMT is valid. If the SMT is valid, this shouldn't get up there. So that's why I like using rejection blocks with SMT. It's literally, in my opinion, how you would want to trade them because it shouldn't get back here if you're right. So we ended up tapping that 15-minute rejection block. And then I liked the reaction here. So we ended up getting a what? A change in the state of delivery, right? And then we had this nice low down here at the 7 a.m. low. I like that. And then I also like the 4-hour CRT low. So I ended up alerting a short right here in this bearish fair value gap, but we ended up inversing and disrespecting both of these bearish fair value gaps, and I didn't like that. So I ended up getting out up here for a small loss, which chipped away at some of the profits that I made in Asia. And then we came down and ended up respecting this bullish PDA raise. One thing that you want to pay attention to when trading the flow state model is if the CISD is correct, it should just fall, right? Especially going into this 950 1010 macro. But we didn't. We disrespected the first two PDA raise, which was this bearish fair value gap that broke this low here, and then this upper one right here in the CISD. So we disrespected those two fair value gaps. And then at the same time, we ended up forming a bullish fair value gap, right? Opposing PDA raise in the opposite direction. That's not something you want to see. First off, you don't even want to see the disrespect of the bearish PDA raise if you're looking to short, right? If you're looking for this to continue, you don't want to see that. You want to see this be respected ideally, drop lower, attack the low. But then we end up getting an imbalance to the upside, and then we get the opposing PDA rate to the opposite side. And you can see this ended up pushing way higher to attack the London high. All right, so right here, we attacked the London high, and on live, I was looking for potential longs up to that 771 area, which is the weekly opening, right? So if I zoom out, you'll see this line right here is the weekly opening price. I was looking at this 5-minute, but we were displacing way too fast, and we were displacing lower way too quick. So this candle closed above the London high, and I'm looking at this fair value gap that formed after that closure there, right, for a continuation up to 771, but we didn't get that, right? 10 a.m. open lower, came down to sweep the 7 a.m. low, and then again, if we're looking at this fair value gap here, this bearish one, this bearish fair value gap here formed after sweeping this low, so we should expect this to hold to our next objective, right? Which is again the 4-hour CRT low, the 1800 low. So if I just rewind this really quick, I didn't take this trade because I wanted to see the 15-minute fair value gap open and tap into it, because I like having two time frames agreeing with me instead of just one. And this whole, this whole like morning session here was just range. And also I wasn't super confident in this trade right here. Some members did take this trade, but I didn't take it. The reason is because the daily profile, 3 a.m. was sponsored by a 4-hour PDA array, and it made sense. So when we came up to sweep out the London high and closed above it on the 5-minute, I was like, okay, I don't know. This might be seek and destroy. I don't want to take it right here. We're in discount of this displacement range here on the 5-minute. I'd much rather wait for it to come up a bit. Maybe, wick above the 5-minute, tap the 5-minute CISD right here. And also the 15-minute, because 945 was a ginormous wick. So this was an order block. This was where the CISD happened off of that 4-hour fair value gap. And we had the 4-hour CRT. So this just gave me more confluence and confidence that this was going to drop lower. But again, we weren't in premium. We weren't, I just wanted to see the 15 open up and tap into it. And then that way the 15-second and the 1-minute agree with the flow state, right? So if we go to the 15-second, you guys can see here, again, I didn't take this. Some of the members did end up taking this though. So good shit. If you're watching this and you ended up taking this trade, really, really good stuff right here. And we ended up getting this bearish 15-second fair value gap that we ended up respecting after changing delivery here out of this 5-minute fair value gap. And we actually had another model that I teach within the private community called the Vendetta model. So what that is basically an internal buy side at the CISD or an OB. It's like an OB model. But we have the CISD right here, flow state model, right? But we have this price action come right back up, sweep the internal relative equal highs here, right under this order block here, which is the CISD. We tap the CISD to a tick. Look at this, right? The high is 21,604. The opening price here is 21,604.75. So that is not random, right? We take out the relative equal highs here, come up, tap the opening price here, boom, that's the CISD. And what the Vendetta model is that we're expecting some sort of V shape, right? We're expecting a V shape after sweeping out the internal buy side, tapping that order block, and then it falls and gives us that V shape down into that 4-hour CRT low that I wanted initially, okay? So this is pretty much where I ended up getting off of live. I did want to keep shorting, and we did try one more short right here, because I wanted to short down into the FOMC lows down here because these are nice equal lows. But I'll show you guys the trade we ended up taking here again on live. This was a break-even trade. So some members actually got out on this trade here though. But we did tap the 5-minute fair value gap here. We got a CISD. We got a double tap of the CISD. So we entered right here and we took it down to this low for about like 35, 40 points. But like I said, I was trying to aim for these lows right here. I ended up getting stopped at break even. Some people got out and trimmed once we made a new low right here. But again, perfectly fine. I ended up getting off after this because I had to hop on a meeting and stuff. And I just ended up waiting. So what I wanted to wait for and what I told the group before I got off is watch this displacement range from 9:45 all the way down to where 11 a.m. opened. And the premium bearish fair value gap here in this displacement range on the 15-minute, that's what I would be watching going into the PM session. And I mean, if we fast forward this here, I was in the meeting right here. And guess what we got? We got the flow state model. I ended up entering on the 1-minute fair value gap right here. Boom, fair value gap tap. Now this is where I made the majority of the rest of my profits right here. So this was about a 2.63. We hit premium. We had SMT divergence right here. So NQ ended up forming equal highs, but ES ended up taking that internal high there. Again, reaching premium. So we reached the premium fair value gap on the 15-minute range. 1-minute fair value gap here. I don't require a CISD tap. This is pretty much the unicorn model here. Ended up getting on the fair value gap and then taking it down to the bullish fair value gap, which was right there. Okay, so this ended up coming lower. We took it. I'm all out there for 76 points. I made about $2,000 right there. And then we tapped into the bullish fair value gap. So there's a bullish fair value gap under this low. There's a lot of setups here. I mean, a lot of setups. Some people took this trade as well. I mean, I don't want to drag this recap out for too long, but there was a lot of setups today. I mean, dude, it was crazy. So the new 30-minute candle, the new 15-minute candle ended up opening lower, sweeping out this internal sell side, changing delivery right here out of that 15-minute bullish fair value gap. So if I go to the 15-minute, you'll see the bullish gap right there. Nice CRT as well. And then the 1-minute got some nice displacement. We had a fair value gap that we ended up respecting here. So order flow is changing. So you have the flow state model again right here. And I mean, you could see what happens here for the rest of the afternoon session. We literally come back again also to retap this right here at 104. And then we just end up flying higher, dude. Like we end up pushing high and then we end up coming to sweep out these highs right here. Boom, sweep out those nice equal highs. And then that was pretty much it. I mean, this day was jam-packed with flow state model, like literally everywhere. Like if you took a loss for any reason with the flow state model, I mean, if you would have been paying attention, you would have made it back here, here, or even here, right? I didn't alert, but I did send it in chat. There was a Hail Mary MOC trade. So a market on close trade. There was SMT divergence here between ES and NQ. So ES made a lower low, NQ made a higher low. We ended up sweeping the previous 15-minute candles low right here. 1 minute, you could look for a CISD. You got it right there. And then it ended up pushing higher. But the alert was sent out in the trading chat. I just said, hey, this is a Hail Mary trade. I'm looking for 771 going into closure for earnings. And because this dropped here, this 330 drop was due to Trump talking about like tariffs or whatever. So I felt like this was an over exaggerated drop. We had SMT. This was the MOC model. We ended up having SMT at 345. So I was just like, you know what? If you guys are down, go ahead and take this trade. This is a pretty nice stop, 35-point stop. And then the reward is just absolutely crazy. I mean, you're going for 771, the weekly opening, 232 points, but it didn't get up to there. This went for about 118 points. So this is literally the thing I sent right when this candle was forming or opening. I told chat, this is a Hail Mary trade. You guys can take it. This is an earnings play. Some people took it, some people didn't, but some other people were just waiting for extra confirmation, which was right here. You ended up getting a change in state delivery with a 15-minute potential CRT, and then you ended up getting tapped right here at the 354.10 macro, and then that ended up pushing higher. So if you would have got in right here on this CISD right here, I mean, you caught a cool 80 points if you took it up to like 407, but most people were out by closure. And even if you got out at closure, I mean, this is still 60 points. So it's pretty banger trade in my opinion. But yeah, that's going to be the recap for today, guys. There was a lot of things that I went over, so hopefully I didn't yap your ear off. But yeah, so I'll be launching my mentorship this weekend, guys. So if you guys want to be personally mentored by me, I will be dropping the wait list down below. And we are going to be officially launching probably on Sunday or Monday, but we're already reaching out to people that want to be mentored. So if you guys want a mentor that knows what the fuck he's actually talking about, is actually showing you transparent results, actually showing you the daily P&L of his live account, right, on a fucking prop firm, which is third party verified, not no bullshit ass broker statements that people can fake. You guys know where to find me. The waitlist will be down below. And if you guys want my free flow state model guide, that will be in the description down below as well. It has literally all the requirements that you need for the flow state, some examples and things like that. So if you guys want any of those things, the mentorship waitlist or the flow state model PDF, it'll be down in the description below. But yeah, hopefully you guys enjoyed this video. Hopefully it wasn't a long one, and I will catch you guys later. Have a good night.